Now for our feature story of the day, the high priest of Bitcoin, Max Keiser, makes $2.2 million Bitcoin forecast amid 21 Capital versus Strategy showdown as the game theory continues in full effect. That's right. And another headline here strikes Jack Mallers, who's going to be the CEO of the company 21, seeking superior Bitcoin play to MicroStrategy. This is like Saylor's dream coming true. You have other companies trying to copy MicroStrategy, aka now Strategy B. Max also wrote here, speculative attack intensifies. Saylor started something in 2020. Don't cry over the low rates and inflation. Borrow cheap and buy the hardest money ever known. The tsunami of the copycats have arrived, referring to 21. And the more Bitcoin bought, the less appealing fiat money, particularly the US dollar, looks. As Satoshi said, it's a self-fulfilling prophecy. Well said, Max. He also wrote, the great thing about self-custody of Bitcoin is that if Wall Street's highly leveraged Bitcoin pyramid schemes blow up, you still own your Bitcoin and price goes exponentially higher due to the carnage of the fiat. We call this the Wall Street apocalypse. Bring it. We don't need no water. Let the motherfucker burn. The great thing is Saylor gets these employee founders at 21 Capital working for him for free. Hence Giga Chad. Hence we have Employee of the Month given to Jack Mallers for the month of April. So thank you, Jack. Well done, brother. So there you have it. But let's dive a little deeper. And then I said as a bonus, we're going to discuss some income strategies for your Bitcoin as per British HODL as a bonus. But let's dive deeper first into Max Keiser's $2.2 million Bitcoin price prediction off the back of this big news. Let's break her down. The Bitcoin price continues to trade with a bullish bias despite the minor correction. That's right. We did recapture 95 just the other day after bottoming out at roughly 74. Meanwhile, Strategy Executive Chair Mr. Saylor expressed even more optimism for Bitcoin. Saylor says Bitcoin can reach 50 million per coin if his company secures just 10% of the total supply, and I have no doubt in my mind that he'll achieve that. Could you imagine 50 million per Bitcoin? I sure can. Quoting Swan here, citing Saylor, if I am lucky enough to grind to 10% of the supply, the Bitcoin's going to 50 million per coin. That's right. I heard Saylor actually say that in the interview. This implies a market cap of above, holy cow, I don't even know how to read the number, but whatever. Obviously, $1 trillion plus. For perspective, it means valuation 10 times higher than the 2023 global GDP of 100 trillion. So I think it means 1,000 plus trillion. So I don't know how to say the number, but nonetheless. Notably, MicroStrategy, the world's largest corporate holder of Bitcoin. Again, they've been accumulating like madmen. Saylor continue to steward the company's aggressive Bitcoin purchases. And then Max Keiser is now quoting 2.2 million in play as a result between the showdown of Mallers' newly formed 21 Capital and Saylor Strategy. And according to Keiser, institutional FOMO, like a mofo, and Bitcoin is reaching a fever pitch. As he shared here, the inevitable and undeniable path for Bitcoin is to take out gold in the #1 spot on the global asset leaderboard. And right now, gold is like a 22 trillion market cap, with it recently just hitting a new all-time high, just shy, I think, of 3,500 just the other day. And he says then to keep going, eventually Bitcoin will represent more than 10% of all the capital on the earth. So he believes the total addressable market of all the money, 10% will easily flow into Bitcoin. And referencing the rise of 21 Capital, Keiser explains that Mahler and Saylor's firms are throwing the US dollar under the bus. While he acknowledges Saylor's prediction is a bit over the bar, he noted that Bitcoin at 2.2 million could be a reality. So yeah, 50 million prediction from the Giga Chad himself, and the high priest is saying, hey, 2.2 million in play. Let me know if you agree or disagree. Notably, 21 Capital is a Bitcoin investment firm created after Cantor Fitzgerald, SoftBank, and Tether. So they have the banking giants, or just giants in general, backing them, which is a big deal. Also, Bitfinex pulled $3 billion in capital there collectively. Jack Mallers comes as co-founder and CEO. We all love Jack, you know, the founder of Strike. He brings experience furthering Bitcoin's adoption at the institutional, corporate, and government levels. Mallers founded the Lightning payment app, Strike. Then we have Stephen Lubka, head of Swan Private Wealth, says 21 Capital could challenge Saylor's MicroStrategy. Mallers is introducing Bitcoin native metrics like the Bitcoin per share, BPS, effectively challenging Strategy's model, where investors have indirect exposure to Bitcoin through the MSTR stock. Notwithstanding, Lubka said that the inadvertent competition could still pan out as a net positive for Bitcoin or for strategy or for both. Exactly, we call that game theory. Quoting him here, ironically, someone throwing the gauntlet at MicroStrategy, we want to become the most successful company in Bitcoin, only makes MicroStrategy more valuable. I'm sure Saylor's smiling right now. Others like TD Cohen analysts see 21 Capital as the most meaningful validation to date of MicroStrategy's Bitcoin-focused treasury strategy. Quoting him here, this is a turning point in institutional sentiment around the MicroStrategy shares. It leaves us incrementally more bullish. VanEck head of digital asset Matthew Siegel did share. So there you have it. At these institutional giants continue to look to rival each other by stacking Bitcoin, launching native Bitcoin investment vehicles. Market liquidity is drying up. The Saylor rivalry could accelerate a supply squeeze, pushing the price of Bitcoin into the parabolic territory. So you let me know your thoughts with that. And as a bonus, I want to touch upon this recent post from British Hodl. Shout out British Hodl. He recently tweeted, when I moved to Dubai, I needed a car. The car would have cost $100,000, $2,800 to rent inclusive of everything. So ultimately you would pay $2,800 for at least a month. So I decided to put $100,000 instead into MSTY and use the growth engine of Bitcoin to pay for the car. And so far I have an average monthly income between $6,000 and $7,700 per month, and the car costs $2,800. And I still have that $100,000 in a growth vehicle. The average Bitcoiner, should they have decided to get this car, would have liquidated $100,000 to do that, and now could have a car instead of the Bitcoin-powered growth. Which way is smarter? And I want you to answer this question, and I want to actually read this person's response, and then British Hodl's response, and then open up a conversation regarding this. And the reason I'm even entertaining this is I'm contemplating buying a brand new Range Rover for roughly $150,000. So I'm thinking out loud, should I use 1.5 Bitcoin and just own it free and clear? Or should I do a play, instead of putting the 1.5 Bitcoin into purchasing the vehicle, put it into like MicroStrategy or MSTY, collect the yield and turn that Bitcoin into an income to pay for the car loan and then some. So there's different strategies. So that's why I bring this up. This person, Shaquilo Oatmeal, what a username. He put TLDR MSTY equals a short-term yield trap. Bitcoin equals a long-term asymmetric upside. Don't trade the engine for the exhaust pipe. The MSTY approach sounds clever at first, but the math doesn't back it. Long-term, you put 100,000 into MSTY and make $600 to $7,700 a month. Sounds good until you ask, what's the real opportunity cost? Number one, Bitcoin CAGR versus MSTY. Bitcoin's historical CAGR is 100% plus annually. MSTY is a yield vehicle, dividend producing, but lacks asymmetric upside. In a Monte Carlo simulation we ran, holding MSTY only had a 6.3% success rate versus Bitcoin when aiming for higher terminal wealth over time. Number two, MSTY income versus Bitcoin appreciation. $6,000 a month is $72,000 a year. It's a great cash flow, but if Bitcoin doubles just like it did from 30 to 60,000, that 100,000 in Bitcoin is now 200,000. MSTY doesn't do that. Number three, it's a liquidity trap. That MSTY income is taxed. And FYI, you don't pay tax in Dubai. So British Hodl is not paying taxes. And similar story here in Puerto Rico, but I digress. It is not guaranteed and heavily exposed to the market beta. If yields drop or the price declines, you're stuck with less income and no explosive upside. Number four, the smarter play. Instead of converting BTC to MSTY, you could borrow against the Bitcoin at a low loan to value, which is an alternative option I'll chime in about later because I have experience with that as I purchased my house I'm in right now using a Bitcoin-backed loan. And so he says, pay $2,800 a month from a small loan and let the biddy ride. If Bitcoin continues the historical path, you not only keep your principal, you multiply it. And you can always peel off later as needed. The debt gets inflated away. British chimed in responding, Oatmeal, you understand, right, that a portfolio doesn't mean 100% in either direction. You can have a balance of both. You sound like a moron with the comparison. The first question you should ask is how much in MSTY? And you've religiously watched my videos, so you already know I said a max of 10%. So ultimately, he says never risk more than 10% of your portfolio into MSTY. So that's why he's clarifying. Stop lying to the people and do some fair chat GBT analysis. So there you have it. You guys let me know your thoughts on that.